So here's the good news for today. 1, I'm back in studio. 2, inflation is certainly transitory, so nothing to worry about there. Why no one is giving backlash against Jerome Powell and the Federal Reserve for their nonsense calling inflation transitory for months and months and months and months is absolutely beyond me. Secondly, you still have Fed people out there, including the Fed president in Cleveland, who we're going to talk about today a little bit, who's saying that we will get to 2% inflation by the end of this year. We just hit 7.5%. They were expected to come in at 7.3% inflation number. This doesn't include food and energy, by the way. And it came in at 7.5%. Obviously, the market doesn't like that. And the reason that the market doesn't like that all of the futures this morning were green until this number came out. So the Dow is down 0.5%. NASDAQ is down 1.5%. S&P is down 1%. The reason is, what do you have to do to tame inflation? You have to raise the interest rates. The higher this number goes, the more aggressive the Fed will need to be with inflation. So that's your reasoning right there. I just don't understand how this guy can go. I know he's just the spokesperson for it, but I don't understand how he can go out there and just say transitory, 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 and then just stop saying transitory and nobody cares. It's just unreal to me. Okay, January inflation reaches a fresh 40-year high. Bureau of Labor Statistics Thursday morning registered at 7.5%. The consensus was 7.3. Like I said, this is the fastest rate since 1982. Where are some numbers? Did they give? I didn't even read the story. I just downloaded it and threw it up there. So I'm reading this with you. I was hoping that they were going to actually put some true data in here about where the majority of inflation is coming from. And I really wanted to see the energy numbers, but apparently, okay, the so-called CPI rose 6% in January, also marking the biggest jumps in 19. The core CPI is whatever. All right. Anyways, inflation is transitory. Don't worry. It's going to be fine. Going back to this woman. So this is Loretta Mester. She's the president of the Cleveland Fed, she says that a case for 0.5 percentage point rate hike in March is not compelling. Okay. So they want to bump it 0.25 point. That's basically what they're saying. The Fed will have to move faster than it has in the past, but it may not be necessary to start the liftoff of interest rates with a 0.5 percentage point in March, Cleveland Bank Loretta Mester says. Inflation could ease above 2% later this year as some of the supply constraints are resolved. Again, we talk about this again. Why are the supply constraints going to be resolved? Somebody answer the question. This is crazy. Just answer the what are you doing that is going to solve supply constraint constraints? I don't understand why they don't say anything. Nobody gives an answer. Actually, you want an answer? Here, I'll give you an answer. Key supplier of wafer chips has sold out through 2026. This is Sumco Corp. They're big in the industry. Supplier of silicone wafers in the semiconductor industry has said that it's sold out of production through 2026, a sign that shortages may not abate for years. Go to the industries and say, what is the problem? You could very easily talk to somebody like this and say, what is the problem? How can we resolve these constraints? You can't just say words and think that they're going to happen. Referring to the Fed's balance sheet, Mester says that the central bank needs to move faster to reduce its $9 trillion portfolio than it has in the past, and it may need to consider selling some of its mortgage-backed securities. God, these people are freaking frustrating. Yeah, I am triggered because I'm triggered by morons. No, these people just literally come out. They're the ones that caused this problem. They've gone for 12 years of just nonsense, print money, do this, give this away, do this, manipulation, buy futures, do that. And then they come out and say, well, we don't know what happened. Then they come out and give away $13 trillion and they say, well, inflation's going to be transitory, and they shut down all the supplies, and then they say, oh, well, it's going to be okay. It's going to come back. But when you actually go to the companies that are supplying the semiconductors, pretty much anything with a shortage, they're saying, no, we can't do anything. So these people are just lying, and they won't do anything about increasing the interest rates to reduce inflation. God. Gold range-bound, here's more nonsense that comes out of Reuters. Gold range-bound as investors brace for U.S. inflation data. Why are we talking about gold? You know what? I was not aggravated this morning. Now I'm freaking aggravated. Why are we talking about gold being stuck in a range-bound area? This is an investment. This is a hedge against inflation. This is something that you look at a very long time down the road. It doesn't matter where it is in the interim. I never read stories about looking 2 to 3 years out on gold. It's always the next day. What's happening with gold the next day? Gold prices were stuck in a tight range on Thursday as investors cautiously awaited U.S. inflation data that could offer fresh clues. Yeah. I think the dollar is going to weaken off of, despite yields going higher, because every other central bank is raising interest rates to defend against inflation, except for ours. If the Fed is ramping up rates too quickly, it's not good for the economy. No, it's not good for the market. It's not the economy. It's not good for the market. Let's be clear here. They don't want to see the market collapse. That's the issue. Especially with every other central bank doing the same thing in unison, in that we could actually see gold a pretty decent hedge over time. Listen, gold is going to do well over time. I'm telling you right now. And somebody asked the question. I don't remember who asked me the question, but when you have, they're saying the CPI number is so high today, why isn't gold going anywhere? Because gold is very multifaceted. You have to look at price of other currencies. You have to look at what other countries are doing with their interest rates. This is not just the United States centrist thing. This gold is a very, very diverse thing that spreads all over the world, and those prices have to deal with everything. So when you see everything kind of come together, like you did truly in March and April of 2020, the world was together. It was together in this shutdown, nobody going and doing anything, whatever you want to call it. It was a conglomeration of ideas in one direction, and that's why you saw gold go where it was. Same thing in 2008. Same thing in 2009. So that's what you're going to start seeing with gold. Everything needs to be in unison for it to work. There's nothing else for me to read here. That's gold for you. Disney. So I did go to Disney for like the first time in like 20 some years the other day. Yeah, their parks are flushed with people, so that's great. They smashed analyst estimates by more than $1 billion. The shares are up 8 to 10% right now. I don't know where they're at. The company saw a major uptick in operating profits from its parks division. Meanwhile, look at this number. They showed a better than expected 11.8 million net additions to Disney Plus streaming service compared to the consensus of 7 million. So something that I didn't think about with Disney, and I was pondering this morning. They really have a great way to monetize Disney Plus commercial. I don't know if there's commercials on there. I don't have. Well, I don't have it. I don't watch Disney stuff, but I don't have kids. What was I trying to say here? They can just, you get Disney Plus, they can advertise to you something. They could send you here. They could send you here. Netflix can't necessarily do that. Hulu can't necessarily do that except if you have commercials. Disney can really monetize this in so many different directions. And it's pretty incredible. They want to get their usership to 230 to 260 million people by the end of 2024. And it seems like they are perfectly on pace to do so. And it doesn't seem like anybody's getting sick and tired of Disney anytime soon. The park swung to an operating profit of $2.45 billion in the quarter from a loss of $119 million a year ago. Guys, so I don't really know anything about Disney, and I didn't know anything about Disney. I went to, where's that place I went to? Polynesian, damn. I don't know. It was some fancy hotel inside of Disney, the most expensive one. I don't really know. It was like kind of older. Maybe somebody could tell me. Everybody was dressed up like they were from the 1800s. Anyways, it cost like $1,000 a night to stay there. And the cheapest hotel was like $200 a night. I didn't realize how expensive Disney was. I mean, there was a couple that was in front of us. They were talking about how they come every 2 years. I mean, I was calculating it. They were staying at this Polynesian hotel or whatever it's called, and they were spending $10,000 for a week. It was nuts. No, not Dollywood. Somebody knows the name. It was a nice hotel. I don't know. Somebody will tell me the name. Uber stock jumps as ride-hailing giant keeps getting bigger, says bookings almost back to pre-pandemic levels. The Uber's Polynesian, Grand Floridian. Grand Floridian, there it is. The Grand Floridian, Polynesian. Grand Floridian, that's the one. Everybody was taking Ubers. Uber, they're back to near pandemic levels of bookings. Their Uber Eats has become the fastest growing delivery player in America. It's still number 2 to DoorDash, but it's growing like crazy. We've added 20 million new riders in just Q4 alone. Uber gained 325 million workers to its platform, bringing the total workers at Uber to 4.4 million. Uber reported fourth quarter profit of 892 million or 44 cents compared with a loss of 968 million a year ago. So good for Uber. They're back. Grand Floridian. Yeah, that's it. So, geez, that's the news for today. Let me check my pulse. It's running pretty good right now. All right, let's see what the futures are doing. Let's see how they're reacting. 1.49. Okay, so they're down even further, Everybody thinks that they're going to just keep ticking up these interest rates. So let's see what the yield is doing. 10-year yield is at 2%. It was not there before I started the show. It was at 1.97. So clearly, actually, this was at like 1.92 earlier today. So clearly, the market doesn't like, or the bond. Actually, the bond market. People are worried, so they're going to start moving to bonds. Bonds are looked at as safety. Look at the 3-month. It's up to 0.3. And what is it? I want to see the 2-year. So here's another interesting one to look at. The 2-year and the 10-year. So the 2-year is right here. Maybe let me get my pen out. So interesting to look at here, the 2-year government yield and the 10-year. There's a lot of people that look at the 2 and 10 and talk about those rates, those inversion rates. So look at this, guys. Look how close these are getting. Look how close these are getting. They are very slowly coming towards yield curve inversion. So if we start getting yield curve inversion, especially on the 2 and 10, it's going to start going. If you really get it on the 3 and 10, bye-bye. Bye-bye, hello plunger protection team. They're going to do whatever they can to keep this going. Twitter reports after the bell today. Coca-Cola reports after the bell. Nope, sorry, before the bell, they were up 2%. I think their profit or revenue was up 10%. AstraZeneca reports later today. Zillow tomorrow. Under Armour, Cleveland Cliffs. What else do we have? Yeah, that's all that I really recognize. So that's that. If you want to join the software, 8 pillars, you get the 8 pillars. You get a retirement calculator, stock analyzer tool, 8 pillars portfolio, exclusive content from Paul, Seth, and myself. Click right here, hop on over. You get $30 a month, gets you access to that, plus 6,000 plus people in the chat. If you want to join the Bid and Ask Nation with me, you get the Employed Trader series. You get this, that's all my trades that I make. You get our day trading live streams, Trading 101 series, which is all of the rules. Plus, we talk about value investing, options, trading, whatever you want to talk about in there, we discuss. So that's that. Okay, give me some stocks. We'll run through them. We'll have some extra time today because, frankly, I cannot talk about the news anymore. With also, by the way, so Disney was interesting. I don't know if I would necessarily ever want to go back there, but it's something. It's certainly something. But yeah, I'm not a big Disney fan. I don't really think it's as much Disney as I just don't want to be around that many people and basically the children. And it's just, I don't know. I'm not a big Disney person. Plus, you got to walk around and it's hot or cold. Anyways, thankfully for me, Nicole's niece loves Disney, so maybe I can just go and hit the golf course and meet them at the car afterwards. Anyways, here's the gap that filled it's up to $156.29. Let's see what we got going here. Okay, here's the deal. Guys, remember, this is the same thing as always. Let this thing calm down. Let it calm down. Let's see what happens this morning because this is a flagpole pattern. With yesterday and today, this is a flagpole pattern. So this can very easily come back down to this consolidation area that I just drew in here, and we can certainly return back to these levels. So let's see if it can. It's going to push into its 100-day moving average, and it might come right back down to its 50. So let this thing calm down. See what happens tomorrow. If it sustains itself up here, maybe you get a pull. Here's what I would like to see with Disney. I would like to see jumps up here today. Let's say it just stays there. Let's draw some wicks on it. Let's say that the prices go there. Tomorrow, I would like to see this, something like that. And then Monday or Tuesday, I would like to see this and then this. And that right there, what I just drew, that is your W formation that you need to create a new support level right in here and really going back into here. And then you can go forward. So just be careful. Let it calm down. Let's see if it actually holds today. And we will go from there. Do I know when Baba reports? You know what? I don't know when Baba reports, unfortunately. But somebody please let me know when Baba reports. The problem is with Baba. Here, let me just type in Baba, and then I'm going to hit new. So Baba, it says it reported February. It says it reports today, but this has said that it's reported previous days also. So I'm really not sure. It's nothing weird. It's just the way that the Chinese companies do it. So we just need to be careful there. Guys, smash the like button for me, please. All right, let's do new. So new is really all we got. Who asked me this question? Oh, Paul Hoovers. Paul, you like to ask questions. I like that. Paul, if you're in the Bid and Ask Nation, tell me your username right now. Anyways, here's the reason I don't like doing this. We don't have enough data. This thing literally doesn't even have a 25-day moving. Does it? Yeah, okay. So it has a 25-day moving average. Doesn't have a 50-day moving average. Doesn't have a 100 or 200. And also, you had a flagpole. Yes, you had a flagpole, and it's come right back down. You're going to open up the morning right here. So don't touch this, Paul. Go and day trade this. Use a 15-minute chart and trade it from there. And you will be perfectly fine. But just please be careful with this one. Let's see. Disney, up prices 10 to 20%. Oh, I have no idea. I will say something about Disney, though. I was walking around that place in awe, looking around saying, oh my God, these people legitimately built a city. I mean, they built a city. It's Disney City. It might as well be called Disney City on the map because they built a city. Okay, Starbucks has gapped down this morning, it seems. I don't know the reason. Maybe because they paid a dividend, paying a dividend today, taking cash out of the business. So maybe that's what it is. But even though it's not like a gap down here or anything, it just gapped down to the base of its consolidation channel. And it's just been in a consolidation channel for about a month now. So let it gap down today. Let it see what happens. I wouldn't be surprised if this thing just went right back up tomorrow. This is typically what happens with dividends and cash coming out of the business. So you actually have a pretty nice trend going over here. If this trend holds, latch onto it and grab it and run it and try to run it up into that 25, maybe 50-day moving average. That would be a good idea. Twitter reports earnings today, so we know don't be trading earnings today. I think I said they report after the bell. Or did they report already? Did they report already? Or did they report yesterday? Hold on, I just want to double check this. Twitter... It says Twitter reports after the bell today. Okay, maybe not. I have no idea. You guys pay attention to it. See when they report. I don't know. Let's say that they reported, sure, and you start getting this move up like this. If you start getting the move and you move into the sweet spot long term, go for it. With also, you're stuck at these major moving averages. That's the issue. I don't like that you're stuck at these major moving averages. But what you can do is try to swing trade this from, let's say we're going to open the day, we're going to open at 37.91, and you can swing this up to 40.47. So you do have a swing trade in here. You do have nice trend going. You do have nice volume. So that's what I would do instead of going long term on it. What do I think about Kevin O'Leary? Well, first of all, his watch collection is awesome. I do like Kevin O'Leary quite a bit. I like how blunt and honest he is. I like how creative he is with his deals. I don't agree with a lot of what he says on, call it, Bitcoin, the market in general, semiconductors. We don't agree on a lot of those things, but I can't discount what he's done. The guy's incredible. He's a hell of an entertainer, and yes, I do like him. He's definitely my favorite shark. And he has been forever, basically. So, all right, Innoviva, there it is. So consolidating hard in here, just sitting right at the 200-day moving average. Don't trade it over here. Complete downtrend. If you want to short it, you can, but I wouldn't short it until I dropped under that wick right there. Let me zoom in and just show you that wick so you don't screw the pooch. This wick right here that happened on February 4th. So if you don't get below that wick, don't short it. Same thing over here, but over here you have a nice uptrend. Now the deal is, you have a nice uptrend over here, but you're running into 4 major moving averages. You did gap up this morning, so we'll see what happens. I know that's why this question was asked, but let's see. This thing can easily gap up here and come right back down here because I don't know what the news is. Somebody tell me the news on Innoviva, and we will go from there. What about Joe Rogan? Oh, y'all want to talk about Joe Rogan more? What do we got here? Mo. Hold on. I'm just looking. Over Cuban? Yeah, definitely over Cuban. I'm going to do Boeing. So if somebody asked me about Discovery and Boeing, I'm going to pick one and do Boeing. Okay, here, I like what I'm seeing on Boeing. Let's pull up a line chart here. Yep, perfect. So we got a nice move to the top, a little pullback, another nice move to the top, a little pullback. So this is creating very nice W formations going up. Now, you don't have a lot of trend going your way right now. So you have to let this trend develop and start moving into that area. Now, also, why don't we? This is a confusing one because what has this been? Let me pull up the candles again. Yeah, you've had a lot of really good green days, and even if we look over here. Look how this is January 28th. 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days of buying volume. More buying volume than selling volume, and you still don't have a good trend here. That confuses me. Somebody let me know. That confuses me. You know what? Hold on. I just want to double check something. Because that is very perplexing to me. BA. Yeah, okay. I just double checked it in 2 places, just making sure that the desktop app wasn't updating correctly. But yeah, okay. So be careful with that one. Maybe just swing trade it up to the 200-day moving average here and go from there. All right. Google. the Google Class A shares. Holy monkey. Look at this. This is all over the map. So I'm going to just, the candles don't really mean a lot to me right now. So let me see. Okay, so here's what I would look for. Your trend is positive, yes, but here you had a big flagpole pattern, and now you're coming up and creating these M formations. So if you keep and here you go again. Let me just draw this a little bit better. So here's your flagpole, right? You came down, and we created a little M here. Coming down, we went up yesterday, and today we're going to open right here. So we're going to create another M. Probably come down a little bit more. This is dropped below the 150. This will probably drop to the 2700, exactly where I drew this. And here's where you get this M formation thing, and you complete your flagpole. Even companies like Google that make flagpoles like this will come down. Flagpoles are not selective to just companies that are hype dorky. Okay, Baba to the moon. Of course. Why wouldn't Baba go to the moon? Here, let's see. We haven't looked at here in a while. Here, is this Turtle Beach? Yep. When did they go public? It was a long time ago, right? Yeah, they're good. Okay, so let's just zoom out. Let's see. So we're definitely at this level of consolidation in here. So I don't really foresee this going much below the $17 area. Right now, they have a pretty nice trend developing. Let's zoom in and see what we got. Yeah, this is a really nice trend starting to develop. So hopefully it continues. Your red line moves into the sweet spot. That would be good. Until then, if you're gonna move up, like, just, man, this is a good looking stock. If you can get a swing trade and run this up to the 100-day moving average, you'll be okay. Now, this is a risk on trade. You are over 80% right now. You kind of missed the boat in here of running up there to this 50-day moving average, but risk on trade, just use stops. And if you have stop limits in place, then you'll be okay. What else do we have? Baidu. B-I-D-U. Aha. Okay, Baidu. Okay, let's pull up a line chart because I think I see some W's. All right, so here's the good news. You ran up, you pulled back. Then you ran up again and you pulled back and you stopped right there. So this right side of the W was higher than the left side. So what I'm hoping for now and what we're seeing this morning, you're getting a pullback. That's great. You need this pullback to happen. It bounced. It didn't have enough volume to break through the 200-day moving average. Over the last probably 7 sessions, you have not touched average volume. So that means that you're not going to break through the 200-day moving average. So you've pulled back. Let's see if you can just get a charge, get some volume come in, get a nice move to the top, and go from there. But right now, unless you get that move to the top that takes out that previous high of 166.70, don't touch it. Guys, smash the like button for me. That would be wonderful. All right. Somebody asked another question. What do we have here? RH. Is that Restoration Hardware? I just went to Restoration Hardware the other day. Is this actually Restoration Hardware? I have no idea. Anyways, this is a dog stock if I've ever seen one. Sheesh. Look at that. This thing has just been beat down. Look at this. Beat down, beat down, beat down. And what, do we have any So this doesn't have a lot of, it does. It has this right here that happened. Outside of this, if this falls below these levels that it hit 2 weeks ago, this thing is coming down here, and you might see 2020 levels. I'm telling you right now, you might see 2020 levels. Tons of selling volume for the past basically 2 months. Virtually, I mean, you have 423,000 shares traded per day. This is crazy. Yeah, pay attention to it. If you take out this wick that happened on February 4th, short it, man. Or wait, was that February 4th? Oh, January 24th. What? Oh, okay, yeah. Short it. Short it, short it, short it. Short it. All right, next. Let's look at the Facebook. The dead company that no one ever wants to own again. The fact that they have 3 billion users means that, and they're not growing anymore, means that they dead. So they're dead. Move on. Leave it for me to make all the money, and you go and enjoy Rivian. All right. Downtrend still, no biggie. Hell of a gap to fill, and I've told you guys this before. The reason that I really love this gap is because we have no moving averages to contest with. To fill that gap, there's no moving averages to contest with. That's a wonderful thing. So let's just keep rolling with that. You have excellent volume coming in over the past 6 sessions. Yeah, looking good. And as soon as this thing breaks into the sweet spot, go ahead and go long on it. As soon as this thing turns up and goes into the sweet spot, go ahead and go long on it. Guys, if you want, this is the same thing as PayPal. If you want to throw a tracker share on here, you'll do all right. I got like 1 billion tracker shares on it right now. So Restoration Hardware and Legacy Village is sad. You are correct, sir. So I went to Legacy Village. I went to where did I go the other day? Hold on a second. Sleep number position. I want to add to my sleep number position. Okay. SNBR. I went to Restoration Hardware the other day in Tampa. One of the most nice restoration hardwares out there. Now, it's not as nice as New York. It's not as nice as Columbus because they got the restaurant and stuff in there. But it's very nice. It's actually exactly the same thing, just without the restaurant. So I go in there and I'm like, okay, I want to get some outdoor furniture. So I look at a couch with cushions, 3-person couch with cushions, 2 coffee tables. That's it. I just want to put them together, make them nice and big, and 2 chairs with cushions. Take a guess how much. Start typing in the thing how much. No upgraded wood, no upgraded cushion. What do you call it? Material. You let me know how much it was. Okay, what are we looking at here? Sleep number. I want to add to my sleep number. So these lines that I just drew, these are a consolidation area. You're just going to consolidate here for a while. Now, be careful. Earnings come out when? Earnings come out February 23rd. So you got a little time, but 5,000. Come on. Don't forget to factor in 7.5% inflation. Yeah. So the market is now open. I would wait here. Person who asked this question, I would wait until this moves into the sweet spot, to be honest with you, because I know you're playing this long term. So do it that way. 1.2, 8,000, 15K. Andrew wins 15K. Actually, it was 16K. $16,000. Guys, a 3-person couch, 2 chairs, and 2 coffee tables. $16,000. I was like, what? $16,000. I did not buy it. All right. I will do 2 more companies, 1 more company, and we'll go from there. Let's do NVIDIA because this was the bee's knees until as of late. So they report on the 16th. So that is next, 16th? Oh, next week. I forgot today's. I kept thinking today was Monday. All right. Running right into the 100-day moving average. I don't think it'll clear the 100, especially unless the volume keeps increasing the way it is. So, yeah, this is a little flagpole-y, but we're getting a pullback today. So just keep an eye on NVIDIA. Be careful of it going into earnings. Okay, XOM. This is going to be the last one. Oil. You know what? Let's just do XLE. So then I can incorporate everybody because we are inclusive on this show. So let's see here. Line chart. Oh, man. Look at these W formations. So, guys, this is the S&P ETF of the energy pullback. Look at these beautiful pullbacks. Even this pullback was pretty harsh, but it's just continued to make W's going up. W's going up. So hopefully today it stops, runs up again, and this thing just keeps going and going and going. You might want to start considering taking profits. I'm not saying take profits yet because your red line has not crossed over yellow. But you're getting to that point. Yeah, looking good. Looking good. Over here, yeah, here's another reason you might want to start taking profits. You might want to start taking profits because over here, your daily trend has changed to the downside. So you might want to start taking profits over there and move on from there. So that is that. $16,000. Who pays that kind of money for that? Easy to remember. I will second that. But there was a gentleman there with his wife, and they were buying this. They were buying those. They were buying them. They were buying exactly what I was buying. So 2 weeks at the Grand Floridian. Monday is Valentine's Day. So should I buy it for myself? Mo calls it Valentine's. SQQ for day trading. You know, we'll hit that in the Bid and Ask Nation, of course. I love it when you do the boomer stocks. I love the boomer stocks. I love the dead boomer stocks that everybody thinks are dead. It just makes my heart so warm and fuzzy inside. Actually, I think if you had a warm and fuzzy heart, you'd be dead. But anyways, I will see you guys 2 p.m. live stream today for everybody in the community. And otherwise, I will be back here tomorrow, same time, same place. Hopefully I won't be pounding on the desk, but you never know. Peace.
Thank you.